Hello, everyone. This is Calvin Russell, CEO and founder of 850 Club Credit. Hope everyone's doing well today. Today, we're going to talk about how to lower your monthly payment on a personal loan. Let's go straight into it. As we know, many of Americans have decided to take out personal loans just due to the economic, standing right now with the economy and such. We're seeing, increased prices in food and gas and so on and so forth. And many people have resorted to getting, personal loans just to kind of, help along the way. Okay. But just because you signed up for a personal loan and you signed for certain terms does not necessarily mean that you're stuck to those terms forever. Okay. Let's go straight into it. So anytime that you sign your name to a loan in general, let's just focus on personal loans, obviously. But when you sign your name to a personal loan, you essentially agree to a certain amount of payments at a certain amount with a certain interest rate. Okay. And when you have though, a set amount of payments, at a certain interest rate for a certain amount of payments, certain time per month, things of that sort, those terms are set. Now, the thing is that a lot of people don't know that you can actually get better terms, but there's a couple ways to end up doing that, which ultimately ends up helping you lower your monthly payments for the personal loan. The easiest way, number one, would be to try to see if you can refinance that personal loan. Less than 10% of finance companies will allow you to refinance with them. This is very common, or more common, I should say, when you're dealing with credit unions. Just because you have a relationship with them. Some banks may do it, but most usually won't let you refinance terms. The reason being, if they have you locked in to pay them more money, they're just going to let you just stay locked into that. Okay. Only, people that actually care about, your financial decisions, sometimes they will give you the option to go ahead and refinance that, or is if you meet certain qualifications, or sometimes they'll just end up just packaging the loan a little differently. They'll just, have you get a loan to pay off the old loan, and they'll end up giving you more money. And it sounds great, but it's really just, them getting two loans in one. They just paid off the other one a little bit sooner. Okay. So that's option one, is refinancing with the company that you got the loan with. Option number two is trying to refinance outside of that company. This is going to be a little bit easier simply because most banks will allow you to have another personal loan. But the biggest thing here is now they're looking at debt to income. They don't care that you're getting a loan to pay off the other one, but sometimes there are people who get loans and they say they're going to pay off the other loan, but then they end up with two loans because they end up using that money for something else. And the reason why banks look at it worst case scenario is because they want to make sure that you can actually afford to make both payments just in case that money doesn't go where it's supposed to go. When you're buying a car, you leave the car at the dealership, and the dealership is their job to make sure that, if they decide to keep it, then they cut a check to the previous finance person. If they decide to auction it off or whatever, or sell it, or whatever the case may be, then they'll go ahead and take care of that. With a personal loan, you are the person. So there is no collateral to move around or anything like that. So it's up to you to meet the qualifications for the other finance company to get better terms. Let's say, for example, you're at 18%. First off, interest rates over 15% for a personal loan are pretty standard simply because there is no collateral. There is no item to come and get if you don't pay. Well, versus the auto loan, you can come get that car. With a mortgage loan, you can come get that house. But with personal loans and actually student loans as well, there's nothing to go and actually get. So because of that, interest rates are going to be a little bit higher. Okay. And when they don't have any collateral there, that's going to play that role. However, there are plenty of banks that give great interest rates under 10% for personal loans. You usually have to have a relationship with them. You usually have to have, obviously, a certain credit score is going to play a role. So all that's going to play a major role. Sometimes it's the amount that you have as well, too. But now let's say, for example, you have a loan amount for, let's say, $10,000. Okay. Then let's say, for example, you can now get another loan to pay off that loan, but they're only going to give you seven. I say still take that seven that has, assuming it has better terms, and then you get that loan, and you use that 7,000 to pay off the other loan amount, and let's say it's like $9,000 left of the 10,000, you use 7,000 to pay that off. Now you technically have two loan payments. You have the $2,000 that's left over, and then you have the 7,000 that you now have as well too. The 2,000 is still gonna be stuck on those same old terms, but it's either that or wait to see if you can qualify. Okay, but that's going to be the only way to actually do it, is to either get another loan from another bank and using that to pay that off, getting another loan from the same bank and paying that off. And then obviously, of course, just know you can also use it where if the loan gets to a certain point where you can put it on a credit card, sometimes they'll look at that as a balance transfer, as well too. But obviously, you got to have enough room on your credit card. Number one, number two, you got to see what the interest rate is on a balance transfer. Okay, there are some times where personal loans will actually have an account number and routing numbers depending on the finance company that gave it to you, so you can actually reroute that money directly over. Okay, so there's a couple. Those are the most popular ways to actually lower your monthly payment on your personal loan. Hopefully this video was helpful. If you like this video, like it. You want to share it, and as always, be sure to subscribe as we have nothing but great content well on the way. Thank you guys so much. Have a great day.